All right, and welcome back to another great episode of hashtag Screw the W2. Certainly hope you've been enjoying this series so far, and if you have, be sure to subscribe or hit the bell on your YouTube channel so you never miss an upcoming episode. With this episode, I actually got a good friend that I met. You've probably noticed a recurring theme at the Real Estate Guys Summit on Sand, Sep, who took about 10,735 pictures, give or take, at the summit, and was gracious enough to share his Dropbox link, which overloaded my computer. And so that's kind of how we met, and obviously been in talks ever since, sharing investor stories and pros, cons, and even like what we're investing in next and what we see for the coming years. So with that, Sep, welcome to the show.
Thank you, John. Thank you for having me.
Yeah, you bet. Yeah. So I know you said this has been a long time coming, and between my traveling and then you traveling internationally, and then obviously we got the time zone change. It's been a struggle, but I'm glad we finally got this. So,
Yeah, really
but
excited for the interview.
yeah. So now I know you and I want to say, had similar paths, but in your instance, can you take us back, however long ago that was? What was your previous W-2? What was the job? What was, or was there an average day, or what was a common day for you at that job?
Yeah, the so my background is as a electrical engineer. I got
Hmm.
my BS from Cal Poly Pomona, and then I was going for my master's in controls and robotics, and
Oh,
I ended up dropping out after 2 years. I was very much wired W-2, like we
yeah.
were talking about before we started the interview, wired to just go to school, get a job, the
Yeah.
whole poor dad philosophy that Robert Kiyosaki talks about between his rich dad and his poor dad.
Hmm.
Especially with so my background being Persian culture, we have a lot of PhDs in my extended family, and master's degrees and all that. And I liked engineering, but I wasn't the 4.0 student, right? So not as I wasn't like the A student, if you will.
Sure.
But I did have a little bit of entrepreneurial experience before that. So first business, unfortunately, was a failure. I started a lemonade stand with my brother. I think we were probably like 8 or 9 years old,
Okay.
and back before Napster became really popular, like when it first started in high school, like I was burning CDs for my
Yeah,
classmates, and
me
I
too.
wasn't charging. Yeah, you're doing that too.
I
So I
mean, if
realized
anyone
that.
from the recording industry, we did not do that.
I hope Metallica's not watching.
Exactly. Yeah.
Yeah, but it was funny because I was charging like $10 a CD, and it took me like 4 hours to do it. I'm like, if I just got a job, even at minimum wage, it would probably, make more sense, but it was still fun.
Yeah.
So from there, yeah, I went to college, did the whole engineering thing, and then graduated in I think it was 2008, and started working my first job. And at the time, I thought, okay, this is gonna be awesome. I'm gonna go work with work at a company and work with people like Steve Jobs, and it's going to be
Yeah.
amazing. And it's not going to be stressful anymore. It's going to be fun. And the first day at my first job out of college, excuse me, they had I was going through the training and all that, and they said, Sep, okay, this is where your desk is, and this is where the printer is, and this is the test lab. This is where we make the circuit boards and all that, for the fabrication and all that, the soldering. And over here, this is where we have the TPS reports. So if you'll remember from Office Space, they had TPS reports over there too. I'm like, oh, that's pretty funny. So that
Jeez.
job they were making fun of, like, oh, we're kind of lighthearted and we'll have that. Fast forward just a couple weeks, I realized that it's not that they were making fun of Office Space. Like, it was literally like being inside of that movie.
Hmm.
And if anyone hasn't watched it, it's a great movie. It's probably like 20 something years old. And it's this guy who basically gives up on caring about the company, and the less he cares about his job, the further along he goes in the career. It's pretty
Wow.
funny.
Yeah, I'm actually one of those few. I've heard it for over a decade. I actually never watched Office Space. I might actually have to cue that up one of these days.
Yeah, there's two. So there's Office Space, the
Hmm.
movie, and then The Office. And I think The Office is the one where like people actually like maybe want to work there. Never watched that one, but it's
Okay.
good to see the two of them get the two different perspectives.
So, okay, interesting. So then, yeah, you obviously similar background. I was the same way, go to school, get a job, even if, I wasn't a straight A student either, but then, work your way up to a career and okay, you're going to be, set for life per se. But then what was was there one time or was there multiple times that just got to a point of, this job isn't for me. I got to get out of here. What was that like for you?
Well, at at that time, I thought it was just that company.
Okay.
So shortly after I started, college is really good at teaching you the theory, and in practice, that's different, right? Like you can
Mm.
have all the book knowledge, but implementation is different. So at that company, I remember the very first project I was tasked to design a circuit board with a bunch of fuses on it. And I had other colleagues that were electrical engineers. And there was one particular that was a mentor. He wasn't a direct manager, but I'd go to him and ask him questions, and he would guide me through it. So I was, oh yeah, yeah, that looks good. And I say, hey, is there anything else I should know? It's like, no, it looks fine. And when you're making circuit boards, it's actually cheaper if you make them in bulk. If you make
Hmm.
500 of them versus just doing a one-off, right?
Sure.
The cost per board goes down. So my supervisor authorized it. We made 500 boards, and when I got them, I was horrified to realize that I actually printed the circuit board backwards.
Oh
So
boy.
none of the chips would have fit on it,
Oh
and all the
geez.
soldering points were off. And then a couple months later, my most of the engineers in my department, including myself, got laid off. And
Mm.
one of my coworkers told me afterwards, like, the guy who you were asking for advice, well, he knew you designed it backwards, and he intentionally didn't tell you.
Oh geez. Yeah,
So
looks
that
good.
that whole the competitiveness, like that was the thing that really bothered me. Like I think I don't know if it was just from an early age. I like the whole team spirit
Hmm.
mentality. Like I didn't see other coworkers as competitors. But there's a bit of that scarcity mindset that people think that the only way they can move up in a company is by seeing others fail, and that's
Right. Yeah.
detrimental to the company. So got another job afterwards, and that was one of my favorite jobs. It was at a company that manufactured bathtubs, and they were one of the largest in the U.S. at the time. They sold tens of millions of bathtubs, and I got hired on in their engineering team. And they had, I think, 6 or 7 factories nationwide. Their corporate office was in California, and my task was to go to one of the factories that had a robotics line, and basically improve it and get it working again
Mm.
because it
Okay.
was down. So they went to robotics for one factory because this was in 2008, 2009. The recession was full force, and the other companies were just labor. Like they would make the bathtubs by hand, manual sprayers along the factory line. And the reason I mentioned that is because it was eye-opening. Like I'd never been inside of a factory before, and just seeing how they can take a raw resin, liquid plastic,
Mhm.
and have it go through this production line. And after a couple hours, out comes this beautiful bathtub, and it's got fiberglass backing and
Yeah.
all the hardware. And you just see each process along the factory, and fast forward, I was able to carry that into my real estate investing business. Not that we make factories, but taking the same automation approach. Um, so at that company, I loved it. Like it was super fun. I learned a lot. They moved me around to the research and development team. But as I would move around, I mean, there were some people who worked at that company from before the recession, and I started working in these jobs after the recession. So some of them saw their pay decrease.
Mm.
Some of them saw the liquid, the value of their house go down, 30%, 50%. So it feels like it's kind of like you're hanging out with the team that lost the Super Bowl. Like they're just down, right? And
Yep.
a lot of that was a lot of negativity and narcissism. Like people were just like, oh, the economy is so bad. And
Hmm.
I remember one manager was complaining about the economy at the time, and that's right around I was looking at like getting into real estate investing.
Okay.
So I was like, I saw these opportunities, and my manager was just getting down by the news and kind of getting bogged down by it. And I would come in all optimistic, and I'm listening to podcasts and all that, and he's like, Sep, don't you watch the news? I'm like, no, not really. He just
Yep.
shook his head. It's like, "Ah, I can't believe it." because like I knew how important it was to just keep a positive mindset. Like I saw
Hmm.
prices coming down, and here I am saving my money. I'm a new college grad and new
Right.
employee. So I was like, this is a great time to buy. Everyone else was like, oh my gosh, this is the worst time to buy. You know, they could only see the obstacles.
Hmm.
So that kind of goes into the mindset, is just preserving a positive mindset, not being blinded by the challenges, like economic, micro and macro, but kind of keeping the two viewpoints at the same time in your head, right?
You're
Like,
right. Exactly.
yeah, it can be
Yeah, and
challenging, but there could be opportunities.
yeah, no, and if I can interject too, it's as we're recording this, and I know a lot of, I mean, I keep up with a little bit of the news. I don't, stay glued hours at a time, or, have CNBC or anything, streaming 24/7. But,
Right.
right now, we've heard, how much, just yesterday, the Fed raised rates another 0.75. All the cost of money is going to get more expensive. Mortgages are going to go more expensive, et cetera. And I think everyone's knee jerk reaction is, oh, that's, bad news. And I just always look at it's like, well, it really depends on which side you are, not only that positive mindset, but like which side of the table are you on? And in my case, I do a lot of trust deed investing, private lending in my self-directed retirement accounts. So as interest rates are going up, that's good news for me. Just one investment I'm in, they just bumped up their pay from 9% to 11%. So
Nice.
that's more money going in my retirement account. So it's like, well, if rates going up, is that a bad thing? Well, yeah, if you're borrowing money, I could see that as a bad thing. If you're the lender, that's a really good thing. I think a lot of the banks have been waiting for over a decade for like, hey, we can finally lend at more than 4%.
Right.
So,
And
yeah.
eventually that's going to have an impact on the values, right? So,
Yeah, and I think we're already, starting to see that, but obviously that's another rabbit hole we can go down. But I think
right.
just the mindset, like you said, is extremely important. So obviously this is after the Great Recession. As far as what was your uh path, so to speak, of getting out of the rat race? Were you starting to see these opportunities? Did you quit your job, then go into real estate investing? Did you do both at one time, or how was exactly the plan that you had to get out of the rat race?
So at that time, my plan wasn't to get out of the rat race. My plan
Okay.
was, at the previous company, there was an engineer working over there, and he said that he had a father that was a petroleum engineer, I believe, petroleum and nuclear engineer, and he bought like a 12-unit apartment building, I think, in
Okay.
Southern California, and he bought it decades before. Then he just lives off of the cash flow. And he was
Nice.
telling me about that. I'm like, oh, that's interesting. So I went to go look at what they cost, and even back then in 2009 it was something like $2 million for that.
Yeah. Well,
And it would have taken me, years to even afford the down payment after
yeah.
taxes and after living expenses. So, and that's assuming the prices stay the same. They would, that was
Exactly. Yeah.
technically at a sale at a discount. So, um, I went to a bank, the big banks, Wells Fargo, Bank of America, and first thing they asked is, how many years have you been on the job? Show
Yep.
us 2 years W-2 and pay stubs. And when I saw how much I was making and the pay stubs, they're like, yeah, you qualify for this much, and that little amount was enough to buy like a bathroom in California, in Southern California. So I was like, all right, I just got to save. I didn't
Sure.
have any mentors at the time, so I was like, how do I save faster? And that's the point where I was like, I should go back for my master's
Mm,
and do that. So I was working full-time job, went for my master's, and I was spending like 2 to 3 hours a day in traffic, and I was getting burnt out. Like I was doing this for 2 years,
yeah.
just basically trying to earn more money. And just by chance, I met with a friend, and they saw that I was burnt out. They said, "Sep, what's your goal? Like, what's your plan in doing this?" And I said, well, I can't do what I want to do, earning what I'm earning now. I have to
Right.
finish up this path. And then they're like, well, what is your path? And they just asked me questions as far as like what are my challenges was. And the main thing was money. Like,
Mm,
I was living with my parents at the time, and couldn't afford to buy my own place. So yeah, I want to have my own place. I want to have, I don't want to have to keep worrying about money anymore.
right.
So she said, well, if you make your goalposts related to dollars, you're going to be on this treadmill for a long time. And she asked me to take out a dollar bill. She's like, just take it out of your pocket and look at it. And I looked at it, and she's like, what does it say on the top? And I said, it says Federal Reserve note.
Yeah.
And I'm like, yeah, so what? Federal Reserve note. So she's like, well, what does that mean to you? I'm like, well, it's they're the ones who control the money, and that's about it. And I want more of this. And she's like, did you know the Federal Reserve is not Federal or Reserve Bank? And when she said that, it was like I got hit by a train. I'm like, what? Like that doesn't make any sense. It says
Hmm.
Federal Reserve note on this dollar bill. It says it on every, 1, 5, 10, 20, 50, $100 bill.
Hmm.
How is it not Federal Reserve? Like why would they lie about that?
Right.
So she started talking about some of the ideas that Kiyosaki talks about, Robert Kiyosaki. And I'd never heard of his name before. I
Okay.
wasn't into like personal finance or even like reading at the time. And she's like, yeah, you got to read this book called Conspiracy of the Rich by Robert
Mm.
Kiyosaki. And it's a follow up to Rich Dad Poor Dad. And I did that. And the book was just an eye opener. So it got me thinking in terms of, if I stay on this path and just trade my time for money, then inflation is going to kill my purchasing power over time.
Yep.
Like, 100 years ago, you could buy a house. Like the average house in the US was something like $2,000, and the average salary was something like $800 per
Hmm.
year. You could buy a Ford Mustang in the 1960s for under $2,000, right? You
Yep.
can't even buy the tires and the glass for a Ford Mustang for that price. But school doesn't talk about this. Like
No.
economics doesn't talk about that. The economics classes, the media doesn't really talk about that. So it was an eye opener to see that there's this kind of like veil kind of being lifted on the world around me, and I got hooked. So from there, just started listening to podcasts. Found Jason Hartman, found the real estate guys, read all the Rich Dad books, Ken McElroy. Started going to the real estate guys' seminars and doing whatever I can to get around other investors.
Hmm.
Like if I could find anyone even like you at the time that was speaking this, that wouldn't look at me like I was crazy, because I was talking about these
Right.
ideas with my friends and family, and like, the heck is wrong with you?
Yep. I've
Federal
been down there
Reserve.
too. Yeah.
Yeah. So that's kind of what sparked the interest.
Okay.
Instead of just like going and being dependent on a bank, but like seeing this as, hey, I need to invest in real estate. I need to get into real assets, and I need to have a plan
Hmm.
B, because the job may or may not be there. But at the time, I was thinking I'll just buy one property a year. I'll keep working this engineering job and buy
Hmm.
one property a year. Um, and then I got laid off from that second job. So I
Oh,
got laid off from
geez.
two jobs. And that's when I was like, okay, like this is probably a sign. Like I just got
Hmm.
introduced to these ideas about real estate investing. The real estate guys had put up their first Secrets of Successful Syndication seminar that they do every year.
Okay.
I went to that first one in 2011, and it was just an eye opener, because then I realized, instead of me buying real estate for myself to hedge me against inflation, I can help others, like people who I love and care about.
Hmm.
I just want to unplug as many people as I could out of the matrix,
Yep.
because I saw kind of like, okay, if I keep going down this path, like, it's just it's going to be like kind of like the Hayek book, The Road to Serfdom, right? But we're just going to be a cog in the wheel. We're not going to have the true financial independence that we want. We're going to be
Hmm.
a slave to our wages.
Yep.
So yeah, in a nutshell. So I'll pause it right there.
Yeah, no, yeah, a lot of good nuggets there. And obviously, your path started earlier, 2011. I started investing in 2016. And yeah, my only res I didn't start sooner, but hindsight's always 2020. So
Right.
at that point, obviously, you had so you got laid off, and you had started listening to podcasts, connecting with the real estate guys, successful syndications, etc. At that time that you got laid off, did you have any investment properties at that time, or was it kind of the springboard of, okay, this is a sign, I have to do something?
Yeah, it's funny. So that second job that I got laid off at, I loved the job. Like I saw myself working there for 40 years if I
Okay.
could. And I had purchased two fourplexes. I didn't syndicate those. And I purchased a third fourplex. And literally a week after I purchased that third fourplex, I got laid off. And by
Okay.
that time, I was drained of all my savings. So I put everything
Sure.
into down payments and all that. And my boss asked him for some advice, which is kind of funny. So he had some properties, I think, in Texas, and they were going into a short sale or foreclosure or something. So it was like,
Okay.
Sep, this isn't a good time to be investing, and there's the values are coming down and all that. And then he was kind of just trying to like kind of give me a little heads up. It's like, maybe don't buy right now. And a week later I got laid off. And the funny thing is, a couple weeks after I got laid off, I got rehired by a different company. And the same boss asked me, he's like, "Hey Sep, those properties in Texas I was telling you about? You want to buy one?" So the numbers didn't make sense, because Kiyosaki got me thinking as far as it's got a cash flow.
Yep.
Um, but I remember there was one thing visually that stood out. The third company I worked at, after getting laid off twice, and after getting introduced to these ideas of passive income, the rat race, the cash flow game, playing that was profound as well. Listening to the podcast, that third company, like I was kind of, I was already unplugged from the matrix, if you will, but I was dependent on the wages. So I worked at this company. I think they were like a Fortune 1000 company, huge biomedical company. And I was one of thousands of employees.
Okay.
And the first day I go to that company, I'm in this cubicle factory. There's just cubicles everywhere. And it's, everything looks just the same. There's no, it just looks like very industrial, if you will. And I remember sticking my head up and looking around left and right. And I was like, oh my gosh, like if I'm going to be here for decades, like I'm not going to survive this.
Yeah.
So I was like, I got to get out. And that's that was the motivating factor, is like I knew that the company wasn't going to be loyal to me no matter how hard I worked. It just really depended on, hey, um, is there a recession, or do we have too many employees in this department or not? And I just saw that I got to have that plan B. I got to take action and
Yeah.
do this real estate investing full time.
Yeah.
So it was a couple years after that. I think it was about 3 years after that. December 2014 is when I went full time.
Oh, wow.
Yeah, I think that about 2-3 years after. And I didn't have like what Robert Kiyosaki talks about in his books is you want to have or in the cash flow game is like you want to have your passive
Sure.
income being equal to your monthly expenses. And then the cash 202 game, you want to have your passive income being twice your monthly expenses.
Yeah.
I wasn't even equal to it. I was slightly below. So my expenses were here, my passive income was
Oh,
here.
okay.
Before I quit, I did a bunch of refinances. I pulled out a lot of equity out of the properties I'd accumulated. And I knew that if I didn't have, I dropped out of the master's by then. And I knew that if I didn't have the time that I was spending in school, time spending in traffic, and the time in this job for a salary, and if I'd spent that time, meeting brokers, checking out deals, meeting investors, it was going to pay off exponentially, even if it wasn't positive at that point.
No, makes sense. So then and I'm just curious, because like I said, I didn't start investing until 2016. When you were doing those refinances back in 2014, I'm just curious, what was the interest rate back then?
I think it was like 4.5, 4.75, so still
Okay.
higher.
Yep.
Yeah, I mean that was high technically back then, because I think back
Right.
then you could get loans maybe in like the upper threes or low fours maybe. But these were investment properties, and there were multiple units, not just single families, so it wasn't going to be the lowest rates.
Right.
But in hindsight, I wish I would have borrowed a hell lot more than I did.
Yeah. Yeah. Hindsight's always 2020. I'm the same way too. So, but so then if I remember, so December of 2014. So we're looking at about 8 years that you left your W-2 and went full time into real estate and investing. Where are you sitting at now? Is there like, are you content with the number of doors you have? Are you still looking to purchase, acquire more, or what's kind of down the pipeline for Step?
Yeah, the ultimate goal. So back then I was just doing multifamily investing.
Okay.
I started out basically small fourplexes, a sixplex, eightplex, then got into a 52 unit apartment complex that I syndicated. And the same time that I was going through my multifamily investing, I had some friends that were investing in single family in parallel, but they were doing that in Atlanta.
Okay.
And one of the challenging things with multifamily is that, and we had talked about this before, right? If you have an apartment complex, especially if it's just one building, right? You can't
Mm-hmm.
sell off like a part of that building unless you
Yep.
do like a condo conversion, if you can do that. but you're stuck with that. So if that building is not at full occupancy, if it's being mismanaged,
Mm-hmm.
if there's a crime issue, if there's something, like, you have to fix the entire problem before you can harvest that equity.
Right.
Versus if you had 50 single family houses, the house 49 doesn't care what happens to house, number 3.
Yep.
You can sell that one, you could refinance it over and over again.
Mm-hmm.
You can reposition it, you could sell a carryback to the tenant. Like, there's multiple exit strategies. So I had
Yep.
these friends that were investing in Atlanta, and we started a similar point, and they just turbocharged their investing, and they were having a lot more success faster. So the more I thought about it, like, my passion was in the affordable housing. Like, I had a
Okay.
lot of horror stories, like, share on the Real Estate Guys radio show,
Yep.
dealing with low income properties. Right, I've had property managers that I've had to let go. I've been let go by property managers. Had drive-by shootings, properties on the news,
Oh,
SWAT teams come
geez.
to the houses. Yeah, this year we've had 2 tenants murdered, not inside the house, but one was on the street and the other was on her way to work.
Oh my
And
God.
yeah, a lot of times when those types of things happens, the investor's like, oh my gosh, never going to do that again, and sell everything and get out of this neighborhood. But with the exception of one multifamily property, when that type of thing happens, we haven't seen that happen in the same house again, because the house is not jinxed.
Mm.
Like, it's typically tenants are not hanging out the right um, influences, if you will, right? Like, if
Right.
if you're into gangs, you're probably hanging out with gangbangers, right? If you're
Yep.
if you're into burglarizing things, you're probably hanging out with other criminals as well. If you're reading physics books, you're probably not hanging out with those types of people,
Yep.
right? Most of the tenants, the vast majority of tenants, even in the affordable neighborhoods, I mean, they're good people. Maslow's
Mm-hmm.
laws, they have families, they have the same needs and wants as we do. They're challenged economically, and I see that as an opportunity to help them, right?
Mm-hmm.
And I saw with what my buddies were doing single family, is like, let's pivot, instead of reposition these affordable apartments, let's do it on single families, because we could do it faster, better, and it actually becomes a better experience for the investor. So back to what you were asking, well, I'm grateful for what we have right now, but the end goal is to get to 15,000 houses. So
Wow.
right now we're at about 220 houses in 4 markets: Kansas City, Jacksonville, Florida, Richmond, Virginia, and Phoenix, Arizona.
Cool.
So yeah, we want to just keep going about it, and I think especially in the next couple months, couple years, it's gonna be a good buying opportunity. So
Yeah.
not of the philosophy of just waiting on the sidelines for the bottom. I think there's gonna be, you know, as long as you're in the mindset of looking for problems to solve, like, there's always going to be the deal flow out
Yeah.
there.
Well, and like, yeah, you had said before, Robert Kiyosaki always says, does the property cash flow? I mean, I think a lot of people get hung up on like, well, yeah, this dropped to 100,000, but I think I can get it for 80, or, well, interest rates are 7. I'm going to wait till they're 6.5. It's like, hey, does it cash flow or not? If it cash flows, it's probably a good deal. Just kind of forget about everything else.
Right.
So, all right. So, and just double checking, did you say you're at 220 doors and you're up to getting to 15,000? Is that the
Yeah.
wow? Okay. Very, very admirable. So,
Well, and it's been and that's with my investors too. So
okay.
I run a couple funds. So some of the investors, they just want to be like private money lenders, hard money lenders, if you will. Others, they have a higher risk tolerance. They
Sure.
want to have more of the buy and hold philosophy, being involved in the funds.
Okay.
But yeah, that's the beauty of syndication. Is like, there's enough meat on the bone for everyone, and it's a very different experience. When you're one of the property management company's largest clients versus if you just give them one house to manage.
Right. Yeah.
Um, so I think it's a little bit more efficient that way as well.
Yeah. Kind of reminds me of the old quote, and I can't remember who said it, but like in regards to banking, if you owe, how to go, if you owe the bank $100,000, that's your problem. If you owe the bank $10 million, that's the bank's problem, or
Right.
something along those lines. But yeah, when you become more of a bigger part of their business, they're definitely more willing to work with you. Definitely don't want to lose you, and definitely want to keep you happy. So,
Right.
all right.
Very
So
true.
this is yeah, really interesting. And maybe we can talk offline, about some of your funds. Might actually be interested in pursuing some of those too. But as we're recording this, we're coming up on your 8-year anniversary since you said screw the W-2, started investing, syndication, so on and so forth. But, I know you obviously shared some of the horror stories. There was the steady paycheck per se, but all in all, even though that you were laid off and then later on you decide, yep, this isn't for me, is there any aspects of the, W-2 or the, traditional job that you do miss, or you have any regrets from leaving?
Now, I think the biggest regret is not doing it sooner.
Mm,
Um, and it was definitely a mind shift, as far as going from predictable, like you have your benefits, you have, you
mhm.
show up at Monday morning and you just work the hours. But when you're full time, it's like you're a business owner, right? So it's different. Like it's all on you. You gotta find ways to put the food on the table, if you will.
Yeah.
Um, but yeah, I think starting sooner and and I think being more taking more risk at the time. It's funny
Mhm.
how at the beginning I was looking for perfect deals. Like I started out
Yep.
just doing the turnkey properties, and that's probably right for most investors. But now most of what we do, I think entirety, it's all value add. So we talked about cash flow earlier. Like when earlier on, I was looking for properties that they had to cash flow from the beginning, but
Yep.
now I'm okay to buy properties that they might not cash flow now, but if
Mhm.
we renovate it, we change the management, we can make it cash flow,
Right.
um, and get more of that forced appreciation. But I think the other thing too, is just getting around other investors. Like we met at the investor summit at Sand.
Mhm.
I'm not sure if you're doing mastermind events too, but that's been pivotal. Earlier on, like the real estate guys, they did this investor mentoring club, and they just actually restarted it. But they would do one in like Dallas and Southern California, Northern California. And when I went there, I was the small fish in the group basically. Like there was
Yeah.
so many other investors that they were way further ahead. One of them was the largest provider of student housing in USC,
Oh,
and
wow.
he's still good friends to this day. But we got together for a mastermind with some other investor friends, and as I was going through the challenges of the business, being around with other investors that I can talk to and learn from and help, and all of us be able to help and learn from each other was crucial. And that's not something that can be done on a website forum online. I mean,
Mhm.
maybe some people can, but having those relationships is key. Like even the asset class that I'm doing now is not what I would have ever imagined 10 years ago. The markets I'm investing in now, not what I imagined 10 years ago, like the
Yep.
philosophies and everything. So
Mhm.
just, yeah, keep learning, keep growing, and do what you can to get around other successful entrepreneurs.
Agreed. Yeah. And kind of like you just said, alluded to, just networking, getting out with more, like-minded people. And, I still kind of chuckle. Actually, this year I bought a agricultural parcel in Paraguay. It was a citrus farm. And I
Nice.
can't tell you how many people so like, how in the world did you find out about that? And then I kind of thought, it's like, well, it's from Paraguay Ag Invest. Yeah, I first heard about it from the real estate guys, and where I first heard about the real estate guys, I couldn't tell you, but it just comes down from the networking, the relationships, and just growing your network. And kind of the old adage, I don't want to say it's not what you know, it's who you know. It's not just what you know, it's also who you know, that I think is really important in life.
Right. Well, one thing too, just to mention to your audience, it's rare that a podcast host will actually compliment another podcast. And I say this because if I could tell a quick story,
Sure.
I was invited to do a podcast interview with a different podcaster, and he was just talking about multifamily. And this is right around the time when I was transitioning from one asset class to another, from
Okay.
multifamily to single family portfolios. And the very beginning of the podcast, he asked, like, Sep, how did you get started? I said, well, I was an engineer and I read this book, Conspiracy of the Rich by Robert Kiyosaki, then The Creature from Jekyll Island by G. Edward
Hmm.
Griffin, and then Equity Happens by the real estate guys. And I was going through David Lindahl's, multifamily training and all that. And then he cut me off. He's like, Sep, hold on. I got to stop you right there. You're naming a lot of my competitors, and I can't have you be advertising for those guys on the show.
Oh my God.
And I'm like, wow. And he literally said, yeah, let's start over, but just leave that part out. So
Oh boy.
I, he asked me the same question, and I said it, and I'm like, man, that makes it sound as if I came up with these ideas. Like somehow I went from engineer to,
Yeah.
fund manager. and it's not true. I have mentors, I've had mentors,
Mhm.
most of the ideas that I've learned are from other greats, but before me. And I've noticed that, like, the people who, like, they have an agenda and they want to just kind of control the narrative.
Yep.
There's an agenda, right? So I think that speaks highly of you
Oh, thank you.
for being so, like, abundant minded, right? Like, you're trying to add value to your listeners and not just trying to push them through like a specific funnel. And I think it's more about the quality of podcasts you listen to than necessarily the quantity. So I
Mhm.
want to just point that out.
Yeah, no, I agree too. And yeah, and whether it's the Real Estate Guys Radio or Get Rich Education, I mean, there's tons of podcasts out there that I've probably listened to thousands of hours of, and I'm a big believer of, like, hey, rising tide lifts all boats. Another mutual friend of ours, Bronson Hill, that I met at the summit year and a half ago,
Okay.
had him on my podcast. He just reached out to me. I was on his podcast, and I think I don't know, there's uh late Senator Paul Wellstone of Minnesota. And yes, he was a Democrat. Yes, you can probably guess some of my political leanings, but he always had a quote that stuck with me, that we all do better when we all do better. And I think that just really goes to show, it's like, it's not a competitive, it's not a competition, it's not a zero sum game. It's not a, I have to throw Sep under the bus in order for me to be successful, or Sep has to throw me under the bus and win all these deals for him to be successful. Look, we're all in this together. If we all help each other, we're all gonna, be where we want to be.
Right.
Yeah.
Definitely
So
agree.
yeah. Well, as we close this out, Sep, and I want to thank you again for taking the time out of your schedule to join my listeners. I kind of call this the soapbox moment as we're heading into 2023 and obviously beyond. But you've been a real estate investor syndicator for over 8 years now. What's your goals, plans, any new projects you're working on, or anything you want to share or promote on my show?
You too kind. Well, thank you, John, again for having me on. Yeah, I mean, if any of the listeners, if they want to stay in touch, I'm pretty active on Facebook and LinkedIn. Just search my name. The website is becominvest.com.
Okay.
And yeah, as far as I guess the trying to promote, I think just the one thing I'd want to promote is getting people to understand that there's always going to be opportunities out there. A
Yeah.
mentor of mine really reframed my thinking in terms of, don't look for real estate. Don't just look that you can buy low, sell high. Look for problems to solve, because
Hmm.
if you look for those, then there's always going to be opportunities, and up
Yeah.
cycles and down cycles, flat markets. Quoting Robert Helms on that latter part. You can make money in any market cycle,
Yeah.
but you have to be a capitalist. You have to learn how to
Hmm.
solve problems. You have to have the team to solve problems. So I think, yeah, just really promoting that idea versus just hoping to find gold in the gold mine,
Yeah.
because then that way you can actually be a miner.
Yeah. Yeah. So, yeah, I think there's the old story back with the 49 gold rush in California. Some of the richest people weren't the ones mining the gold. It was the ones, selling the shovels and the hardware to
Right.
everyone that was doing it. They made a lot more money than a lot of the miners.
Ironic, huh?
Yeah, no kidding. So, all right. Well, again, I want to thank you. And sorry, what was the website again? Sup, I didn't quite catch it.
Oh, sure. It's becominvest.com.
Common
So my
Invest.
last name and then invest.
Okay. All right. And I'll have that in the show notes as well for all those listening. Sep, it's been great to touch base, and wish you the best in 2023.
Thank you, John. Great time being here.